choose to make a little bit more money on their loans by maybe offering a slightly higher interest rate as a means to not charge these. But $800 is lender fees. That's the only thing you, Alex, have control over. Everything else is going to be your estimate of a third-party charge. What's interesting about our industry is our customers, the media, and our regulators, they put the onus on us to be able to accurately estimate everyone else's charges. Charges that we have zero control over, but we have to know them. But people are like, oh, I need to see a good faith estimate from you. I need to see a loan estimate. I'm like, all right, but please know I'm just an experienced professional doing my best to let you know what everyone else is going to charge you for you to buy and finance your home. That's what I am. Because there are 1, 2, 3, 4, 5, 6 sections of which I only control one. Look, if you need me to discount my lender fees by $500, let me call my manager, see if it's okay. If that's what I have to do to earn your business, then we'll do it. You also have in this 800 section like appraisal fee. Technically, we don't control that, right? We have our roster of appraisers. So you have things like credit report fee. Like we don't make money on appraisals. We don't make money on credit reports. You're gonna have a flood cert fee in there also. Like that's however much money we have to spend when we go to First American or whoever we use, and we run your property address through their system to see what flood zone you're in, right? So like there are certain fees in here that we kind of don't control either because they're just pass along fees. But 800 section are basically fees that you're paying because you're getting a loan, right? These are my prepaids, by the way. Both of these combined right here. That's my escrows and my prepaids. These don't even technically show up as closing costs. Technically, when I explain to you guys what an itemization fee worksheet is, I will tell you that technically these are considered escrows and prepaids, the 9 and the 10. The 8, 11, 12, and 13 are your true closing costs. But you as a consumer, you don't care about technicalities. You care about how much darn money out of your pocket. So I'm going to tell you how much darn money out of your pocket because that's going to be your down payment plus escrows plus prepaids minus any money you've already given. Section, that's where it's 3 and 3. 3 months of escrow, 3 months of taxes and reserve, 3 months of insurance and reserve. Your 900 is for anything that's prepaid, like 1 full year of homeowners insurance. Anything that's prepaid, like what's today's date? The 4th? If, math majors, ready? If you were to purchase a home today and finance it, when's your first mortgage due? Where August 4th is today's date.
Your first mortgage payment?
Mm-hmm.
October?
Yeah, October. So how many days of interest do I have to collect for the month of August? The answer is 28, minus the 3 days that we've already gone. Because you have to pay, many people would be like, oh, what's 31 minus 4? 31 minus 4 is 27. But today counts. So really there's only 3 days that have come and gone. The 1st, the 2nd, the 3rd. So you need 28 days of interest. So if you're doing an itemization fee worksheet for somebody and you know their exact closing date, I know that this 900 section is going to allow me to do my 28 days of interest. Yeah, so a 3% interest rate times a $300,000 loan is $9,000 a year in interest. $9,000 a year divided by X amount of days. Yeah, but 28 days of interest, and you have to also pay for your first full year of homeowners insurance. Right, so that's in the 900 section. We already said 800 is going to be lender fees plus appraisal, credit report, flood cert. Right, VOEs, all of that garbage that we have to do to qualify someone, that all shows up in the 800 section. It's the only thing I know to be true, accurate, and I control. The next thing you're going to have is 900 section, which is going to be your prepaid days of interest, which look, if you close on the 31st, how many days of interest do you pay? You have 1 day of interest.
So it's never going to be 0.
It'll never be 0. Mm-hmm. Yep. I'm going to freak you all totally out. You can do what's called an interest credit. If you close on a home loan in your first 4 days, some lenders may allow 5, some it's only 3, let's just say 4. You can actually get a credit for the first 4 days of interest, but then your mortgage payment would not be due in October, it would be due in September. Yeah. You would do that, let's say I got into a pinch and I was short cash to close. Oh, let's think on our feet. Well, what day of the month are we in? Well, hey ma'am or sir, When I collect 28 days of interest, you're short $500. If I give you an interest credit, your closing costs are going to be cheaper by $700, but your first mortgage payment is going to be in September, not October. HOI. You all speak my language? You speak HOI? Homeowners insurance, also known as hazard insurance. Cool. Now when I get to the 1,000, 3 and 3. 3 months of taxes, 3 months of insurance. This is your escrow reserves. Escrow reserves. So when we're buying a house, we know we have to put 3 months of taxes in reserve, and we have to put 3 months of insurance in reserve. That's it. Now it may look a little different. It may look as we're collecting 9 and then we're doing an aggregate adjustment, but just know that's escrow reserves, 3 and 3. Some people do 2 and 4, right? They do 2 months of insurance, 4 months of taxes, but 3 and 3. It doesn't really matter. 2 and 4, 3 and 3. Again, we're estimating what it's going to be. Ultimately, there's a algorithm that is run in the closing department at every mortgage company, and that algorithm, based on the day, the month, the time of year, that algorithm is going to get it down to a penny, because we as lenders are federally regulated how much money we can keep in reserve. If we have too much, we have to reimburse. So when you get to closing, but it's just going to end up being 3 and 3, escrow reserves. How do I describe an escrow account to a consumer? Ma'am or sir, here's the thing. With you getting a home loan, we as your lender are going to be the people who are going to renew your homeowners insurance every year, and we're going to renew your taxes. Look, if you end up getting new homeowners insurance, that's cool. You'll end up having to let us know. Your homeowners insurance agent will know how to do all this for you, and we'll make sure whoever your new homeowners insurance that they get payment as well. But every single year, every August, we're going to renew your homeowners insurance, and every November, we're going to pay your taxes. But because things like taxes and insurance, they fluctuate, they go up more than they go down, we're going to put some of your money aside at closing, so that way if they do go up, your taxes go up and your insurance goes up, we're not like scrambling trying to get a hold of you so that we can get that bill paid. We're going to use some of the money that we put aside, and we'll go ahead and get those things renewed and paid on time, and then we'll hit you up later and be like, hey, FYI, your taxes came in $800 more. We paid the bill, but we're going to change your mortgage payment going forward so this doesn't happen in the future, and we need you to reimburse us because we kind of cut into our savings account. That's what that is. Your escrow reserve account is a savings account for future taxes and insurance. Also, ma'am or sir, we are a bank, we are a lender, and banks and lenders, just like insurance companies, we hate losing money. And if for whatever reason something went sideways and you couldn't pay us, I know you wouldn't do it, but like roughly 2 to 3% of all homeowners don't make their payments. If that ever happened, we at least have some of your money to make sure that we keep the taxes and the insurance updated, so that when we do foreclose, we're not totally losing our shirt. Yeah, the F-bomb I drop, yeah. All right, so then I get to 1100 section. I literally thought like I'm gonna do this in 5 minutes. I do nothing in 5 minutes, by the way. 1100 section is title fees. Let me ask you a question. Do you have any control over the title company? No. In our market, seller chooses title. Do we know why the seller chooses title? Because the seller in our market pays for the owner's title insurance. If we are in Atlanta, different market, different custom. If we're in Miami, different market, different country, different custom, right? Like when we're in either one of those places, we may very well choose a title, at which point we'll know those title fees, da-da-da-da. But we don't. In our market, the Central Florida market, Tampa to Jacksonville and everywhere in between, including West Palm, including most of Tallahassee, the seller's gonna pick them. So I don't care if it's First American, North American, New American, doesn't matter, it's all American something. Samuel Johnson III, but they're talking about America, Big Brother, Uncle Sam, okay? So 1200 section, Uncle Sam needs his money. The government fees. This is where you'd see a recording fee to the county. This is where you would see the Florida document stamps on the deed, Florida document stamps on the mortgage, the intangible tax. It's when
Yeah.
Yeah.
That's where you
Yep. And then the 1300 section, man, this is my catch-all. You should know that if someone's buying and you name that gated community, they're going to charge you something to move in. And we're in August, which August is third quarter, right? Fourth quarter doesn't start until October. They're probably also going to have me go ahead and pay at closing my part of August and the September HOA dues. So all of these things are going to show up in the 1300 section. So if I want to be a badass estimator for my customer, I need to start quizzing them. Like, hey, by the way, here's some other fees that we don't know about because we're at a bar drinking together. You're not even under contract. You're probably going to have to pay some kind of upfront HOA unless you don't buy in an HOA. Your realtor, I don't care if it's EXP, Keller Williams, Remax, Watson, Weichert, Caldwell Banker. Keep on going on and on. They're more than likely going to have some kind of a realtor transaction fee. Here's what I need you to know. It's on the low end $199, on the top end probably $499. Anything above $49, you should probably have a conversation with a realtor about. Most charge it, and it's common and customary. If you don't want to pay it, that's between you and your realtor, not me. Do not hold me accountable. Do not kill the messenger. What's going to separate me from my competition, especially those call center jockeys up in New Jersey? I know about this. I know about this because I live and work here. They don't. They may very well show you an estimate that's $1,000 cheaper. I'm going to tell you, theirs isn't cheaper, theirs is wrong. Mine may be on the high end. I don't know about your HOA dues. I'm going to put $500 in here. I don't know about your realtor fee, but I'm going to put $395 in there. If your realtor ends up waiving it for you, kudos. If your realtor only charges $195, kudos. If you end up buying a home that isn't in a PUD, a planned unit development, and they don't charge you something, awesome. But right now, we don't know. By the way, I'm saying $500, it could be $1,200, right? I mean, I'm saying $395, it could be $495. And then you're gonna have a survey. You're gonna have a survey. Survey companies charge somewhere between $275 and $375 to go out and survey your property.